Joining me for a closer look at what's playing itself out in that market scene is Jacques Pretorius from Sinayo Securities. Jacques, always a pleasure and a good afternoon.
Thank you.
Oh,
Yeah.
well, not a bad start to the day, I guess. Green screens at home, green screens in Europe. It is quite a turn from what we've seen throughout the week thus far.
Yes, I think the big figures that are weighted this afternoon is the inflation figures out of the US. There's been a lot of speculation around that. Um, it's from two folds. I think from the one side, you've got unemployment staying low, staying very strong. And the converse to that, obviously, the inflation that's holding up perhaps a bit stronger than anticipated earlier. If we just dial back 6 months or so, the forecast for inflation in the US for the year was around about 2.6%. That has marginally moved up to 2.8% for the rest of the year. And that's probably the reason why we're seeing that interest rates aren't coming off in the US yet. I think a lot of us expected interest rates to decline in the first half of the year. It now looks like it's being pushed out to the end of the third quarter or perhaps even the fourth quarter. And instead of having 3 rate cuts for the full year, possibly only 1 to 2 cuts. That obviously weighs on the sentiment of the market. But I still believe right towards the end of the year, we'll see a rate cut and it'll definitely improve the sentiment in the markets. And we perhaps will have a bit of a stronger market going forward.
Also, what often see when the Fed holds interest rates is a bit of a weakening of the rand, a strengthening of the dollar, I guess, as that differential holds. Are we anticipating this? We also know, Jacques, we've got our own drama here at home, I guess, in the political space.
Yeah, that is true, right? I remain optimistic. I remain optimistic that there's going to be a good outcome with the coalition government. I think that will be very positive for us. We've obviously seen some results, trading statements coming out of a few companies being in somewhat pressure due to inflation, due to high interest rates. And I also think, once we see a turnaround of that situation, a positive outcome on the inflation, sorry, on the political front, we'll see possibly interest rates being cut in South Africa as well later in the year. And in general, I do believe that a positive outcome political will also support the markets, especially on the local stocks. The local ink retailers, banks. I think those sectors will perform well in the second half on the back of a favorable outcome.
I also want to get your thoughts on some company results today. Quite a busy one, actually. I'm more excited than anything to hear about Telkom turning the tide here. Many of us were highly critical. I think I was one of those critiques who were like, why does Telkom not just sell? But it looks like, they have actually worked through a lot of the impairments that were passing through those financials. And the next set of numbers should be very encouraging.
Yes, it's obviously the set of results we saw now wasn't a very clean set of results. A lot of restatement, impairment charges moving back. So there is a bit of encouragement though that they indicate right that they're doing well out of the new technology areas, probably away from the old fixed line communication. So at least they are seeing some growth in that space. I think going forward, perhaps things will look a bit better, as soon as we work through these figures that we've seen now, clean up the financial statements, and perhaps we'll see a positive going forward.
And then also notice them expecting a 35% decline there in their annual earnings. Of course, this is just evidence of a consumer that is strained, but also I think that South Africa and the way that we consume vehicles is changing quite a bit. And what we consider to be a new vehicle in a home may not be a brand new vehicle in the real sense of the term.
Yes, I think obviously evident is the high interest rates, high oil prices, all have a substantial impact, right, on that whole industry, the affordability for individuals to buy new vehicles. So it's got a huge knock-on effect, right, on that specific area of our market. Motors itself is not expensively priced, relatively cheap on a P multiple point of view. And they're also one of the companies that will greatly benefit, right, when we start seeing interest rate cuts. So I'm looking forward to that towards the end of the last quarter into next year. I think there could be a substantial recovery, right, in their earnings, but obviously going through a very, very tough patch at the moment.
I also want to get your thoughts on SPAR here. That share price shooting up today. I think investors very impressed with, I think, the milestones reached in terms of getting rid of that Polish business. What they have said that the acquirer of that Polish business wants to keep using the SPAR brand. So that could be a complete sell off the books, but some revenue coming in. I guess that is the best case scenario for this part of the business.
Yes, what is interesting to me from a SPAR point of view is if you read through the results, funny enough, the management is still indicating quite challenging environment. But to me, what stands out is the fact that they've got this Irish operation and they've got the Swiss operation. Now, the Irish operation looked like it was doing very, very well. Perhaps the Swiss operation not as well yet, but could possibly turn around. But what is significant as well is that their turnover, around about 35% of their turnover is currently coming from offshore. That's 25% from Ireland and 10 from Switzerland. But from an operating perspective, right, it's higher than those figures. So virtually half of their earnings are coming from this offshore operation. It just shows you that perhaps the operations offshore runs at a slightly higher margin. And obviously they've got the big benefit, right, if there's currency weakness coming through on their statement. So it's quite interesting how they've, to a large extent, externalized themselves and become sort of a much more of a rand hedge. So I think, yeah, market reacting very positive on that news today, and possibly also anticipating second half interest rate cuts, coming through in the share price.
With that said, Jacques, I'm keen to get your stock pick, but first let's take a look at counters that have found favor with your industry peers.
It's still the China Internet ETF. And really, I think this is an effective, although somewhat aggressive way to get exposure to the Chinese economy. And I think why Chinese markets are looking interesting to me. One, you've still got the economy growing at about, north of 5%. We're starting to see the manufacturing and services sector really expanding quite nicely. And a key one for me is that the retail and investor sentiment only recently in the last month or so has started to improve. That's given a nice kick up to the markets, but the valuations are still massively depressed compared to the US counterparts.
Microsoft, I looked at their numbers. They're delivering well, especially on the cloud business. It's growing well. Revenues up 17%, gross GP up 18%. They're managing the business well. It's a pretty big ship to turn, and Sasha Nadella is turning it well. So I think that's a stock to hold on to for the long term.
I'm going to go PayPal. And now fintech used to be all the rage. AI is now all the rage. And last night, after Apple started to talk about its AI initiatives, and also its enhancements to the Apple Wallet, PayPal started to fall. I think it fell nearly 3%. Now it is down 5 years, 43%, but it's up 6% year to date. So is this still a good company? Fintech is still a good theme. The revenue of this company is still growing. They're doing share buybacks. They've got about $15 billion of cash on the balance sheet. Their margins are good, and they're not an expensive tech company.
All right, Jacques, keen to get your thoughts on some of those. I think a bit of a theme around their PayPal, Microsoft, as well as the Crane Shares CSI China Internet ETF.
Okay, first of all, I think this, for the time being, I think this AI theme will continue. So I do like the stocks in that environment. I think we can see what NVIDIA has done. I think previously we called NVIDIA and did like the stock earlier the year. That's up quite a bit, nearly 50% up to $120. So I would go with the theme, as a safe hedge, in PayPal and Microsoft. Just the other investment was the ETF in China ETF.
Yeah. Yes, it was.
I think China is slowly but surely turning the corner to some extent. I'd probably play it slightly differently by way of a emerging market ETF, which actually includes India and Taiwan to some extent. I think the weight of China has fallen in that ETF to some extent. So it's a more broad-based investment you're making, and you're making a call to some extent on India, which I believe, we saw a bit of a fall off after the elections there, but it's quickly recovered again in India. And I think India is very much in the same position as China was probably 10 years ago, with a lot more growth prospects. So I'd like to widen my investment slightly towards the emerging market ETF.
With that said, which counter are you going with this afternoon, Jacques?
I'm going with Truist. The reason for that is we recently saw the results of Foschini come out. It looked quite strong. Share price bounced nicely. Truist hasn't had the same benefit yet, but I do think that they're going to benefit hugely, right, from both the coalition government with lower interest rate in the second half of the year. So it's definitely one of those counters that I'd pick.
Wonderful. A pleasure having you with us this afternoon, Jacques. Thank you. That was your midday markets update with Sinayo Securities' Jacques Pretorius.